So we are here with another installment of Investing Wizards, and we have Kenny Levine and Howard Lindzon joining us today for a great episode to talk about single stocks. And Kenny has a great stock pick for us. He's going to talk about Zynga. Before I get into that, why don't you tell us kind of like what your background is from kind of school and then how you got into investing.
Okay, fantastic. Yeah, thanks, Rob. Hello, Howard. So NYU grad, finance, started on Wall Street at Morgan Stanley, worked there almost 20 years, just shy of 20 actually. Left a few years ago, spent the bulk of that time on the equity sales trading side of the business.
Sales trading was like a really tough job function for me to grasp when I was just learning what Wall Street is, because it's kind of like sales trading. Well, are you trading? Are you a salesperson? Stuff like that. So, like for people who don't know what a sales trader does, can you just give us like a definition in terms of like what's the value add on Wall Street of a sales trader?
Okay, information, serving and protecting. Those would be the metrics that I would use to most clearly define what a sales trader does. So I represent an account, could be Fidelity, could be Koyfin Incorporated, could be Howard Lindzon. You use me as your access to the market and your eyes to the market. What's my role? I understand what sectors you care about, what names you care about, and your overall trading style. It's my job. It's my job to bring clarity to your day, to give you nuggets to allow you to outperform, whether it's the data flow, the information flow, or your actual strategy in trading and investing.
So the way like I started thinking about it, it's like a white glove customer service for clients of the investment bank, such as Morgan Stanley, and you would, with a white glove service, provide that information, that intel to Fidelity's traders, and making sure that that relationship was just very strong. So anything they needed, whether it's an order or information or something went wrong, you were the point person on the trading side.
Correct.
Yeah, and it's a cool job because you're not trading, you're not executing, but you're in that kind of flow of understanding what other clients are doing, what the sales trader next to you is doing, and it creates kind of that interesting information opportunity and a really important job 20 years ago. Like,
yes, exactly. That's a great point. As information has become more democratic, let's say, the need for sales traders has kind of subsided a little bit, right? Yeah. There's still a lot of expertise to be provided by the sales trader, but in this age of DIY, do it yourself, it's cut into that business, not just the sales trading side, but the business as a whole.
Cool, awesome, great. So we're going to discuss Zynga today, but before we get into Zynga, the interesting part about investing and the point of the show is to expose people to different investment styles. Mm-hmm. And there's no right or wrong investment style. And so why don't you tell us what is your investment style? How do you invest?
Yeah. So my investment style starts with the story. Okay. That is coming to understand the story of a company and its execution of its business. Okay, what do I mean by that? Using Zynga as an example, I am looking to find companies that I can invest in based on a 3-year horizon and a portfolio platform. Okay, so how does it work? What I am looking to do is understand the prospects of the business. What I typically do is I dive in looking for companies that are in a sort of a reorganization, refurbishment of their business. Over the years, that would be a New York Times, a Microsoft, a Wendy's, AMD, These type of names that have the brands, but brought in new management to really scrub it down and build it back up. And that's what brought me to Zynga. But within that investment strategy, there's a few things that I do like to focus on. I'm looking for momentum. I'm looking for that turn, right? I'm a big baseball fan, so I often use the innings in a baseball game. Ultimately, I'd like to catch a company in the third inning of that baseball game when maybe the opposing pitcher starts getting a little tired. You start to see the momentum from your team, right? From your company. And I will use a mix of fundamentals and technicals to help us to best enter the names and exit the names.
And it's worth mentioning to our non-US listeners that there are 9 innings in a baseball game, so 3 is about a third way through.
Yes, exactly. And I feel like, very well done. I feel like at that third inning, you're starting to see the liftoff. You're starting to see the trajectory. Maybe, the opposing team pitcher's getting a little tired, right? And you're starting to put more guys on base. You're starting to get more hits. The runs are starting to add up, and it starts compounding itself, right? So that's what I'm really, that's how I like to position myself.
So that's like an interesting it's an interesting style because it's a thematic style. So you're looking for thematic, not turnaround companies, but something where something's changed, and that change could last for a long time. And that's well, Howard, is that related to kind of 8 to 80, or is 8 to 80 just a much longer time period?
It just depends on the company, Or today, when he talks about his stock, I don't see it as a game. It's not an 8 to 80 company, but I think there are no innings in 8 to 80, right? They're just products that everybody uses.
Got it.
Right.
Yeah.
I'm trying to find companies where products have kind of jumped the shark, and it's an 8-year-old uses an 80-year-old uses. And Kenny, I think, is thinking more about it could be, we can't predict if it's on its way to potentially being an 8 to 80 company, but first it's got to, I'm usually 8 to 80 companies. I don't know what inning they're in because they're just evergreen.
No, nobody knows. Only it kind of got it. Okay.
But I get Kenny's explanation because that's what we're all looking for with trends. Is You don't have to be the first one in, and you don't want to be the last one out.
Yeah. And then Kenny, in that framework, like let's say you have conviction on a company like Zynga, or another company like Wendy's or Microsoft that you mentioned. How do you know? Let's say a company the stock price goes down, or they miss a quarter, or there's a pullback. How do you know whether something has changed or whether that's just a buying opportunity?
Yeah, that's a great question. So when we talk about the story, right, we're diving in to the company, to all the metrics that the company is looking at, and as much as we get access to, right? I mean, we don't have everything in front of us, but we're looking at revenues, we're looking at margins, we're looking at competitors, we're really understanding the story. And what are we looking to do? We're looking to gain comfort, confidence, right? That, it would be like owning your own business, right? As you start to see the orders come in, you get that confidence. And that's what we're looking to develop so that, we could use today as a perfect day. The markets are down 5%. Okay, we'll talk more about Zynga later, but Zynga down 3%, 4%. I'm excited. Okay, I'm not nervous. I believe in the story. Nothing has changed regarding my vision, my focus of why I might be invested in the name. And if it's down, I'll be looking to add. And as I said earlier, we'll use some technical metrics and some fundamental metrics to figure out where those levels are. But at the end of the day, comfort and finding that belief that you want to be in this stuff.
Got it. Cool. Yeah. And so,
I also want to say something. There are things, I mentioned the word nugget earlier, and I really listen intently to what companies are saying, right? Not just revenues are up. I want to know why revenues are up. Not just we had a good quarter. Why did we have a good quarter? If it was a one-off quarter, right? Some kind of, they pulled one switch and it happened to work because there was demand. Are we going to see follow through? Are we not? And so I'm looking for those type of things within the company presentations to gain that advantage. And where am I getting that? I am looking at, I'm listening to earnings conference calls all the time. Okay, I'm on top of these companies' calls. I'm listening and I'm reading to make sure that I really understand the metrics to their business to get that advantage.
Awesome. Yeah, you can get a lot of nuggets of information in earnings calls, both from what they say and also the style of how they say it, and kind of you definitely get that feel by listening to the audio or listening to the call in terms of how confident or how happy or how excited management is.
And the more you're in a stock, the more you get to understand the tendencies of those managers. So when they communicate to you, you know, it's like reading the Fed notes. You know that last time they said lower rates for longer, and now they didn't say that, right? So there's information within the information, is what I'm saying.
Yeah, cool. All right. Anything else to talk about high level before we jump right into some Koyfin charts?
No, I think I'm good there.
Let's do it. All right. So I'm just going to share my screen. We're going to be over here, let's say. Okay. So let me pull up Zynga. And one of the ways that you look at stocks, and let me just create a new template, is we're just going to look at the sales of Zynga. So we're just going to look at revenues.
Mm-hmm.
And we're going to look at revenue growth. So just put Integra here and go down here. And this is the 1 year revenue growth. And we'll just make that a little bar, make that a little easier to read. Cool. So here's the price of Zynga. Here is the revenue of Zynga. Here's the revenue growth of Zynga. So before we get into kind of like, there's obviously something happening here because the stock price was going flat or down to flat for a long time, and recently that's reversed. Maybe you could give us a quick summary of what does the company do? What is Zynga? How do they make money? What are they exposed to?
Sure, the mobile gaming. Okay, but if you go back to 2011 when they first IPO'd, 83% of their revenues were coming from browser games, mostly through Facebook. What they saw is a competitive landscape that that left them short. So you see, as time passes, revenues fell off and they start flattening. 2016, the company hires a new CEO. He comes in with a new strategy, and his strategy is we're going to run with the games that the successful games that we already have on our platform, and then we're going to look for some M&A opportunity.
Yep.
Through 2017 and into 2018, you see that there's a slight uptick. And I also want to say that when I'm looking at companies, I try not to get too dirty with the numbers, right? I really try to keep it very simple. Lean on the revenues, lean on the margins, lean on the opportunity, the guidance, etc. So that's why we're really only looking at revenue right now. So 2016, the new CEO starts, he puts in the new strategy, and 2017 sees an uptick of revenues by 4%. Nothing outrageous, nothing too exciting, but there's an uptick. Okay. And that was with him just focusing on cleaning up the operational part of their business. Right. And as we get through 2017 towards the back end, we see that we're starting to see a lift. Okay. 2018 comes, and in 2018, you continue to see that momentum and you continue to see that small uptick. But then they go and they start executing on another part of their strategy, and that's M&A. They start to take hold. Okay, yeah. So that's what starts getting me excited, right? When I see the 4% uptick in revenues in 2017, and I start to get a feel for what the company is looking to do. Now we know Frank, the CEO, Godot, he made it very clear that he is looking for M&A opportunity to grow. Okay, so I have in my mind that these growth opportunities for this stock, for this company, are out there, and he's looking to add them to the platform. Well, he does in 2018. And what really took my attention, what really caught my attention was him telling the market that the turnaround was complete in late 2018. That got me excited. Now, of course, we need to understand who's telling us. We need to make sure that we do our own diligence, that we're very comfortable with the numbers that we're seeing and the story that we are seeing, right? But to hear a CEO make that declaration, that's a nugget to me. That's something that I'm thinking, okay, this is exciting. So what do? I go back in, I review my position, because I already had a position by mid 2017, but mid 2018, I'm very excited now when I hear him make these comments. And as you see, revenues have begun to take off, and stock has moved in correlation.
That's a pretty incredible. I'm just going to move this too. That's a pretty incredible ramp up in revenue. So revenue kind of went from 800 million. It's about 1.5 billion now. So about double in 2 years. And you're actually seeing this acceleration in growth. And so revenue growth over the kind of last 12 months was 50% versus a year.
Does that include the acquisition though? The revenue ramp? Do we know?
The new one.
It does.
The one that just happened, or the?
No. Well, they acquire. So if we look at if we jump to their financials, they've been acquiring. So this is cash acquisitions. So they've been acquiring sort of 300 to 500 million of acquisitions over the past 2 years. But anyway, so they're acquisitive. They started doing acquisitions kind of around the time the new CEO took over, Frank, and that's helped grow their revenue, which is always a good thing. They're in the right place in terms of the industry, right? The industry itself is just growing very rapidly.
Mobile gaming is the biggest gaming market for biggest
right.
game.
So it's a secular growth market, and even kind of like in March, if we think about kind of like in March, April, when the market really sold off, the stock barely got hit, and it never even made a lower low relative to the trend, which is really interesting to see.
Mm-hmm. Well, it's a perfect stock for this environment.
Right.
People are home. People are playing games. It is one of those work from home names. So I think it provides defense as well as some offense.
Got it. And what are the actual products that they have out there?
So what they like to talk about is their 5 forever franchises. Okay, so they, as we said, they focus their energy on maximizing the efficiencies of their best games. So they have 5 games that they were quite excited about and are generating most of the revenues.
Mm-hmm.
As Howard mentioned, they did just execute another acquisition of Peak Gaming, which they spent $1.8 billion on, and that will add 2 top 20 games to their portfolio. And a metric that I would get very excited about is that they're expecting that that's going to increase their DAUs by 60%.
And got it. And move them into kind of international markets.
Correct.
Got it. Okay. And then just kind of looking here, $8 billion company or almost $9 billion company. That's not that big in the gaming space. So if we look at like if I pull up a chart here, and if I look at if I pull up the ETF, which is ESPO, we said is the video gaming ETF, the Zynga is kind of like one of the smallest companies in this ETF. So it's a pretty small name, and so that one lends itself to the fact that they have just a lot of runway within the sector to catch up on market share, and to make a pretty interesting acquisition target for one of the larger players that want to get into mobile. Because from what I understand, none of the other gaming companies are really in the mobile space.
Mm-hmm. Yeah, there's been chatter over the years of Zynga being a takeout candidate. I don't really have that in my sights. It could very well happen. I don't think anybody would be surprised.
Yeah.
But
Yeah.
by no means am I saying or thinking in my investment strategy that this is a part of the investment strategy.
Right. And if we look at companies like Take-Two, just at the performance over a long period of time, or ATVI or Electronic Arts, so Activision has been the real kind of monster, and that's 20 years, but let's look at over 10 years. These stocks have done really well. Obviously, Zynga only has been around for not that long, but if we look at QQQ, like all these stocks have outperformed NASDAQ because the sector just has so much growth in it, and such a secular growth driver.
Are you able to put Zynga on there?
I am, but it won't be. It won't.
And I think COVID accelerated a lot of these trends short term.
Yeah.
Yeah, we've heard from a few companies, a few of these technology companies. I believe Shopify and PayPal both made comments that they feel that this pandemic has taken them straight to 2030, which is very interesting. And I think that people should be taking into account when they're looking at what tech names they would like to invest in, and or the whole market, the market as a whole, right? It's probably best to factor that into your models, maybe add a little juice to your metrics that you're valuing your companies.
It's kind of interesting because Zynga is almost flat since IPO. So obviously had a huge decline, but since IPO, it's sort of coming back to just where it started.
Yeah, I mean, a lot of it was, they were a hot company. I know Mark for a long time. I mean, they rode the Facebook trend and the social networking trend, and now they've become more of a traditional gaming roll-up and attention company.
Yep, and really, like over the past 3 years at least, have really outperformed all the other players, and year to date doing very well. Cool. And then, Kenny, how do you think about like valuation? Like if I just like, so just looking at it versus its history, it's actually trading at the lower end of its range. Obviously here, very highly valued, 28 times now. But for a company that's growing earnings at 50%, 28 multiples is probably not that rich given the growth. And then if I plot some other kind of companies in here, EA, Take-Two, it's trading right sort of in the middle of that range of some of the larger companies with much higher growth rate.
Right. And as I said, I think they guided up this past quarter for the year. They're talking revenues up 25% versus 2019, and I think with the acquisition of Peak, we can see revenues. I think they're targeting revenues at 1.69 billion for 20. I think we can feel pretty certain that they're going to get to 2 and above 2 billion next year, 2021.
So, got it. So like these revenue estimates for next fiscal year in terms of like 2 billion for next year, you think they could beat that next year?
I do, absolutely. I don't think most analysts have factored in the new acquisition into their numbers as of yet. So your system might not be reflecting that.
Yeah. And then whenever I start looking at a new stock, what I like to do is I like to look at it and just I have a template here that I saved. And basically this looks at the stock price versus next 12 months estimates. So stock price, next 12 months estimates. And you have this really nice trend here of both the stock and the estimates going up. So obviously if the stock is going up, the estimates are flat. that's not a good sign because the multiple is just expanding without any fundamental expansion. But this kind of dynamic where the estimates are going up, the stock is going up with it. That's a really nice trend. That's something that we want to see from stocks and that are going up in a straight line.
That's a fantastic chart.
Yeah,
I like the way you can overlay that.
Yeah, and then if we think about the other thing I wanted to look at was Zynga short interest, kind of see how people are positioned. Okay, and so here, and I'll just pull up the stock price as well. Stock price. So on the percentage of short interest is relatively high at 5%. It's not. It's down from sort of beginning or end of last year. People have covered, but still relatively high relative to versus its own history.
Mm-hmm.
How do you think about short interest?
I monitor it, but it doesn't really get factored into too much of what I'm doing on a day-to-day.
You're just fundamental story and how other people are positioned. It's kind of like, it's interesting, but that's not core to your thesis.
Right. I mean, we always want to be aware, okay, when we're investing in our stocks, we always want to be aware of what other people are doing, what other people think, okay, how they're valuing the company, how they view the company.
Mm-hmm. And so another way to look at that is the analyst rating, 1 through 5, 1 being a sell, 5 being a buy. And that's kind of another thing where, the ratings have gone up, but over the past, let's say year, it's sort of been flat. So it's not as if the entire sell side is bullish on the name. It's sort of been in a holding pattern over the past year. So that's actually a pretty good sign from a positioning point of view that the fundamentals are working in the name. Some investors are still pretty skeptical with high short interest, and then sell side isn't really behind the name yet. They're sort of in a holding pattern over the past year.
Right.
Okay. So this is a stock you like. We're not. This is kind of like let's leave it to one stock. We're not gonna discuss anything else. Are you on Twitter? Where can people find you?
I am on Twitter.
Should be more active.
I'm semi-active. I don't like to be too active. When I have something to say, it's out there.
Yeah.
But I try to reserve. I think there obviously there's a lot of noise, and there's a lot of. I want to actually address that point. There is a lot of noise out there. Okay, you hear people of having their opinions. You have your opinion. Rob has his opinion. Howard has his opinion. And it's very important that us as investors, when I said earlier about finding the story, believing in the story, getting that comfort and confidence, it's imperative that we block out the noise, right? And so that's why I try not to add too much to the noise, and I try not to bring too much noise into my little domain on the day-to-day.
Yeah, absolutely.
Well, I think Kenny has a plan. I mean, listen, picking stocks is, I don't use macro much when I'm picking stocks. I mean, Rob, you lose a little macro, and Kenny, I'm not sure if you use macro, but
I use the macro to underline how aggressive I want to be in terms of adding the positions or reducing the positions. But when I enter a position, it's 3 years. It's a 3-year horizon. It's an investment. It's not a trade. And if we run into some dips and the story is still intact, we're going to add. And if it goes down a little bit more and we feel comfortable and that the story is still intact, we'll add more. And what will happen? We might find ourselves overweight. But when we get to that point where the stock has recaptured those levels that it had fallen from, we'll start taking off and getting back to more equal weight portfolio position in the.
Awesome.
all right, got it.
Cool. Awesome. Well, Kenny, thanks so much for being on and sharing your investment style and your views with us. Really interesting. And we'll watch Zynga.
It held in really well today with the NASDAQ down 5%.
And I think that's so important to watch for these stocks that have secular growth and long-term story. And a day like today when small caps are down 7% and Zynga's down 1.5%, that's a huge sign that there's a very strong story behind that. And so any stock that's down much less than the market today, that's a really interesting data point to watch.
Yeah,
I would agree. Okay, well, thank you for having me. I appreciate the opportunity, guys.
All right. Thanks, Kenny. Thanks, Howard. Talk to you guys soon.
see you guys.